A very good afternoon to all across the African continent. Good morning to those joining us from the length and breadth of Canada. I'm Gareth Blaw, President of the Canada-Africa Chamber of Business, and it is my great privilege to welcome an incredible panel today as we tackle the topic of connecting the continent, focusing very keenly on the infrastructure requirements and the amazing partnership opportunities that exist. I'm very privileged today to be joined by three excellent panelists joining us from both East Africa, West Africa, and then right here over in the Canadian capital of Ottawa. Your Excellencies, dignitaries, High Commissioners, as well as all who are from the business community, thank you very much for joining our directors, past presidents, and others. It's a great privilege to have you joining us today. Mr. Deepak Dave will be kicking us off, and he'll be followed by Dr. Mabuba Diagne and Janice Kotut. And what I'd like to say about Deepak is, for those who don't know, and there's probably a small audience who are unaware, Deepak has been leading at the Canada-Africa Chamber of Business as a director, as well as a chapter head in Nairobi for several years. I believe Deepak, it's probably close on a decade. And that leadership has included experience on Bay Street and an understanding of Canadian markets, financial requirements, investor interests, right through across the spectrum when it comes to major projects across the continent in his role at the Africa Trade Insurance Agency. Deepak has worked with our other two speakers who are joining us today, and he's really curated this program as he has so many here at the Chamber. So Deepak, on behalf of all of us, a big thank you, and to the Government of Canada through Global Affairs, with whom we're so privileged to work in delivering this program. Your support and participation has really been an excellent partnership. Your Excellencies, the Chamber members in particular across the countries who are members, thank you so much for being with us today. By way of a background, as I hand over to Deepak, who will provide an outline, the first address, and then chair the panel that will follow as part of it, I'd like to recognize Dr. Mabuba Diagne. He serves currently as the Vice President for Finance and Corporate Services at ECOWAS Bank, and he comes to this panel as a seasoned international investment and development banker, over 2 decades of experience, a variety of executive responsibilities across the continent, and some full details, of course, are in the biography, but Deepak will be going into some context to that incredible leadership role that Dr. Mabuba plays. Janice Kotut is the former regional director for Guaranco in East and Southern Africa. Her experience, including founding a new company, Sustainable Links, where she's investment manager, brings really a lens on some of the key infrastructure items, particularly with her experience in frontier markets. Janice, an absolute pleasure to have you joining us from Mombasa. Dr. Mabuba, I know you're in Abidjan, and of course in the nation's capital, along with members of parliament and others, Deepak Dave coming to us. Without further ado, I'd like to just make some passing reference to the McKinsey & Company analysis. In 2020, they demonstrated Africa's pipeline of infrastructure projects included 2.5 trillion worth of projects estimated for completion by 2025. That was across all asset classes, and yes, it did include projects in the feasibility stage, but nevertheless, the sheer scale is enormous. And we truly believe that Canadian institutional investors and firms are incredibly well positioned to be major players in the financing and the delivery of projects across a continent that is now united in a single free trade agreement to which Canada played a major role as a partner. Mr. Deepak Dave, thank you for all you do for the Chamber, for your role in curating the program for this event. The floor is yours. A very good morning to you.
Thank you, Gareth. It's an honor to be speaking to such a distinguished group of visitors to our panel today, as well as, of course, two very dear colleagues with whom I've worked for a number of years in different roles. And I'm glad that we have a chance to give them a platform from which to speak to our membership base, as well as all our interested investors and lenders who are looking at the continent, assessing their opportunity there. As you pointed out, I am in the nation's capital. I am in Ottawa at the moment. It's just below subtropical temperature of about -7 degrees and 14 centimeters of snow on the ground. So for our colleagues in Mombasa and Abidjan, we can't wait to host you here next year at this time. Definitely make sure you bring the right gear along. And I'm particularly envious of Janice because, of course, I grew up in Mombasa. So when she mentioned that's where she was, the thought of being a little boy running around on the sand there and, you know, sitting here right now, there's certainly a slight pang of homesickness for my birth home. I'm delighted to have this opportunity to talk to all of you, particularly because of my role at the Africa Trade Insurance Agency, of which I'll speak in a moment, and the fact that the ATI works very closely with organizations that Dr. Mabuba and Janice have both been leaders at over the years in this critical area of infrastructure on the continent. And of course, we continue to strive to bring it to the attention of more Canadian investors, Canadian traders, Canadian exporters, and service providers. So, as Gareth pointed out, I'm the Chief Risk Officer of the ATI, an organization with an A rating from Standard & Poor's and Moody's. And that rating enables us to be a reinsurer of products as complex as promissory notes in multi-tranche, multi-year, multi-currency syndicated loans, through financing the import and export of commodities such as food and natural resources, all the way to supporting renewable energy infrastructure through guaranteeing payments and mitigating political risks associated with the projects. Our overall portfolio is about $6.5 to $7.5 billion. It varies around that amount, given that our capital base is now almost $480 million of core capital, and somewhere close to about $1.5 billion US dollars worth of underwriting capacity just at ATI alone, with further reinsurance capacity that we bring from international syndicates and global private reinsurers. Regrettably, Canadian investors and insurance firms have been a little bit slow on the uptake, and we do not deal with them as much as we'd like to. But certainly within the European and Asian markets, our presence is quite well established. We operate out of Nairobi and 4 regional offices, 2 in West Africa, 2 more in Southern Africa. And over the years, we've also worked very closely with institutions such as those backed by the Public Infrastructure Development Group, such as Infraco Africa and Garanco Africa, institutions where Janice played a critical role for a number of years until very recently. And in her new role as a founder and partner in Sustainable Links, she continues to remain deeply embedded in the construction, the setup, the development, the financing, and the execution of complex projects within infrastructure and related spaces. Dr. Mabuba Diane is also in fact, he's a former colleague of mine from the Trade and Development Bank, which focused on East and Southern African lending opportunities in the development impact space, and is now, as Gareth explained, the vice president of its very close equivalent in the Western African region, the ECOWAS Bank for Investment and Development. And he has played a critical role over the years, not just in developing and executing on infrastructure project financing, but also in related areas, and is now making a major drive to grow EBIT's presence and known across the continent. And we know also, of course, within the Canadian markets, access to Francophone Africa and to West Africa is particularly critical as well. And we wanted to make sure that we had a balance on the panel of opportunities from the Eastern, Southern, and West African contexts. So we'll certainly be taking questions at the end, and I look forward to dealing with some of those later on. But for now, I'm going to pass to my dear colleague Janice Kutut to talk a little bit about her experiences, not just in the PIDGE years, but also of what she sees going forward from a new role, and how organizations such as hers provide a platform for the infrastructure investment space on the continent. Janice, over to you in Mombasa.
Thank you, Deepak, and thank you very much for that kind introduction. Indeed, I spent 6.5 years at Garanco providing guarantees to mobilize local currency finance for infrastructure, primarily focused in East and Southern Africa, and have just started a Sustainable Links with a couple of 3 other agile entrepreneurial women, which will basically set up a debt fund that will focus on the climate gender nexus, but primarily for middle market companies. But enough about that. I think the topic today is really about the Canadian-Africa connection and infrastructure in particular. So let's just talk a little bit about Africa first, because Africa is a continent of paradoxes. And the first paradox that I think the Brookings Institute put out, I think just a couple of days ago that they published, is the fact that Africa has 20% of the Earth's surface. I think 1.3 billion people, and by 2050 they say there'll be 2.5 billion people, and 60% of the world's arable land is actually in Africa, and 30% of the world's reserve minerals, which is what is really supporting new technologies is actually in Africa. Yet, at the same time, Africa only accounts for 3% of global GDP, 3% of global trade, and most of that is commodities and minerals, which will be music to Canadians' ears, and 25% of the world's disease burden. So, I mean, it is a paradox, but it's an opportunity. And as Gareth was highlighting at the very beginning, McKinsey also did a very interesting study about the fact that there is a significant pipeline of projects in Africa. So if you go to any PPP unit in Africa, you find they've got 70, 80 projects in pipeline. But very few of those actually get to financial close or actually materialize into a project. And there's different reasons for that. One could be developer experience or expectations. I think one of the reasons McKinsey cites is a difference in perceptions of what the correct risk allocation is for projects. And we see that a lot in PPP projects. And you know, the need is significant. So like we talked about, as McKinsey mentioned, the 250 trillion, just to put this into some real numbers, if you think about the energy sector, for example, 600 million still don't have access to electricity, right? And they say that 2/3 of people still rely on biomass for their energy. And that is incredible. So you can see that as a challenge or an opportunity, because in some ways, a lot of people feel and think, and we believe that creates the opportunity for Africa to leapfrog and become a model for a green resilient recovery. I think the points have been made about infrastructure and the challenges, and I just wanted to talk a little bit about some of the things that Canadian companies should think about as they come to Africa. And I'm using not just my experience at Pitch, but I also happen to sit on the board of the Nairobi International Financial Center. And I assure you that foreign investment is something that is a priority. And we spend a lot of time trying to think about how we can get more investment into Africa. So I think it's important to make the point that, yes, there's investment, yes, there's a pipeline, and yes, it takes long to make projects, but there is an understanding and appreciation and a need for foreign investment. But investors have to be clever about how they approach these opportunities, because it isn't, the path isn't well trodden. I always used to say in my previous role, pathfinding is hard. So when you're doing something for the first time, and a lot of these PPP projects, you're doing them for the first time, you have to be ready that it's not a path that's been trodden before. So you have to be ready, I guess, if you like, for the twists and turns, if you like. So what I'd advise people, measure twice, cut once. So spend a lot of time on doing your research, getting your data right, so that, as the McKinsey report pointed out, that drop in projects, which essentially is 80%, that never pass the feasibility stage, you make sure you don't fall into that trap. I think the other thing, just to point out, is that a lot of countries, particularly in this part of the world, Eastern and Southern Africa, have got a growing experience with PPPs. So that is something that investors should be aware of. I also sit on the PPP Petitions Tribunal, and there's a growing jurisprudence about how we treat foreign investors. So in the past, whereas it was seen to be okay to not respond to foreign investors, we just closed, we just wrote a judgment this week, actually, almost, I won't say penalizing, but essentially we found for the appellant because they didn't get a response from the government. So we're trying to push the boundaries of what government should be doing, and we're trying to make government more responsive. I'm going to stop there. I don't want to say too much more. The one thing that I will say is that one of the reasons that I'm really excited about our new initiative is that it's going to address what we call the missing middle. because in my previous role, one of the gaps we found was that a lot of infrastructure opportunities were smaller than what typical DFIs want to go for. So $3 million, $5 million projects, so that's something to look at. But there are several DFIs, including the one that Dr. Diane is with, and my former employer, who are created to support investors. So reach out to them. The Private Infrastructure Development Group solves for market failures. So please, happy to provide contacts at the end if required. So I'll stop there, Deepak.
Thank you, Janice. That was wonderful. And I'm sure with our previous experience with the webinars, there's always people who've got questions lined up. So it's great that we can leave some time for that later on. I'll now hand over to my brother, Dr. Mabuba Diane, to talk us through some of the activities he has overseen in the past, but of course, more importantly, the future opportunity for Canadians in certainly the area of the ECOWAS Bank for Investment and Development's sphere of influence. So, Dr. Mabuba, please go ahead.
Okay, many thanks, Deepak, and many thanks, Gareth, for first of all organizing this, and which is very useful, and also thinking about the ECOWAS Investment and Development Bank, which as you know has a number of francophone countries, and the corridor between Canada and the West African region, should be strengthened. And I will not bore you too much about what I call the plain vanilla infrastructure need. Those trillions of dollars that everybody is talking about is definitely a big opportunity for Canadian companies. But I will zoom down into two specific sectors where I strongly believe that Canada can do it now and can do it very good, almost better than anybody. And it's in the agro sector, agro-industrial sector, and I will tell you why. Africa is currently importing $35 billion of food. By 2030, it's going to be 130 billion. We see a lot of young African people trying to leave the countries, trying to leave the continent. And now I have asked myself, while being at the ECOWAS Investment Development Bank, which, as you know, is a bank that do trade, that do project finance, that do trade finance, across all the industry sector, power, origination, transmission, distribution, mining, and you guys are extremely good at mining. So I will not try to educate you what the opportunities in the mining sector, because you know it better than we do. The reason why I have decided to zoom on the agri sector, I will tell you why. And I have prepared a couple of slides that I will probably take you through, but instead of going through slide by slide, and I will make the slide available after this through Gareth and Deepak, in case you want to have some copies. Okay, do you guys see slides? Okay, so you share.
They are visible. Thank you.
You're seeing the slides?
We're just at the end of the slideshow, Doctor, but I think if you start from the beginning,
let me just go there. Sorry. Okay, just give me a second.
No problem at all. And just a reminder to all, please do keep those questions coming through. We've got a few on the WhatsApp line already. I'm counting 8. Okay. Doctor, back over to you. Thank you.
Okay, thank you. You get it now?
We can see it in PowerPoint mode. So I think we need to switch on slideshow. Yeah.
Okay. You take, for example, the agri sector. I was saying that Africa currently imports $35 billion of food. By 2030, it's going to be 130 billion. I take one sector, which is the poultry sector. The underlying commodity of the poultry sector, alongside all funky machinery behind, is maize. You guys are known to be able to produce from 12 to 15 tons per hectare, where African countries are producing, if they are lucky, 5 metric tons per hectare. I strongly believe that there is an amazing opportunity for Canadian exporters to export high-tech agri know-how, high-tech agri machinery, while helping Africa to produce locally the maize that is required to stop importing poultry, chicken meat, while exporting the Canadian know-how, agri know-how, and I will come how. cashew, cotton are all the sectors where the underlying machinery can be done by Canadian companies. And I will use a very simple case study showing how Canadian exporters can export $100 billion of machinery, of know-how, in order to enable a country like Ivory Coast to process locally the 1 million metric tons of cashew that they are producing, and I will tell you the added value. Today, look at the import, meat import. Ghana import currently more than $300 million of poultry. Guinea-Conakry, 50 million euro. Senegal utilize 60 million fertilized egg to produce their day one chick. More than 70% is imported. All those things, the underlying product is maize. Now the question is, how Canadian companies, how Canada and West Africa could join forces together. We are no longer talking about aid, we are talking about economic diplomacy. How can we export Canadian machinery, Canadian know-how, Canadian ink to create those 100,000 jobs while enabling, boosting the maize yield in Africa? This is basically Canada contributing in the Sustainable Development Goal, which is the United Nations objective. Look at what is happening in Canada compared to what is happening in the rest of the world. You guys use drones, computerized tractors, higher tech agri to produce between 12 to 15,000 metric tons per hectare. Now question is, how through the Chamber of Commerce, Canada, Africa, how can we basically enable those high-tech agri-Canadian companies coming into Africa, not giving aid, selling machinery, educating people, transferring know-how in order to assist the African countries to produce, to reach more than plus 12 metric tons per hectare. And by doing that, we unlock, let's say, the agri opportunities. Look at here, this gives the whole value chain. You guys know how to produce maize at the top end level. You guys have companies that do hatchery, companies that do trucks, companies that build, let's say, feed mills, companies that build hatchery. All those things can be packaged in a very organized manner across the whole value chain, where Canada in an African country like Guinea, like Ivory Coast, like Ghana, like Senegal, come and pitch a holistic view of a whole value chain system in order to unlock the opportunity. And by doing that also, we create what I call agri-mechanized center. If a Canadian company is selling the tractor, if a Canadian company is selling the irrigation system, if a Canadian company is training the people, we have everything to make it happen. What Africa has to provide: land, youth, government, banking sector, and I will come to it later, how it could be done. And I strongly believe that this is possible. Now, you see here, you have the farmers, you have the tractor, you have the feed factory, you have the machinery, you have the hatchery, you have the storage, you have the abattoir. All these things are components that Canadian companies are manufacturing currently. Why not? Look at here how it can be structured. You have Canada, through their export Canadian, the Export Credit Agency of Canada, working with organizations like the ECOWAS Investment and Development Bank, packaging ECA-backed funding, bringing, let's say, private sector, Canadian private sector, local private sector, the government to do private-public partnership in order to produce everything that we need to create the maize locally, to create the chickens locally, to build the abattoir locally, and to build the distribution channel. What is the advantage of doing that? We are basically producing hundreds of jobs into the continent. And this opportunity, when it comes to the meat industry, exceeds billions of dollars. Another industry sector, cashew, in Ivory Coast. I am just currently in Ivory Coast. Yesterday, I was in Yamoussoukro visiting a cashew factory. Currently, Ivory Coast produce between 750 metric tons to 1 million metric tons. Less than 10% is processed locally. You guys have all the technology, all the machinery to make it, to do the manufacturing from A to Z. You may think that No, cashew, only the Vietnamese can do it. Only the Italian can do it. Only the Indians can do it. Not necessarily true. When you walk through the floor of the cashew factory, 99% of the components are produced from countries like Canada. Look at here. I give you a simple case study. 1 million metric tons of raw cashew nut. Price of the raw cashew, 400,000 CFA per metric ton. This is roughly $750. If they exported raw like as they do today, the total market value of the 1 million metric tons does not exceed $750 million. The price of a processed cashew is $6 per kilo, 1.5 billion, because you need 4 kilograms of raw cashew in order to produce 1 kilogram of clean cashew. Now look at the estimated cost to build one factory to process 30,000 metric tons with 400 jobs. Does not cost more than $20 million. Can you imagine now a country like Canada with a strong private sector, with very well-known, globally known engineering EPC companies come to Africa and say, Ivory Coast, we're going to bring the money, we're going to build those factories, Mr. Government, commit to it, bring us your private sector, let's do PPP, and we make it happen. Now look at the value add. 34 factories would be sufficient to build 34 times 30,000 metric ton factories to produce 100% of the 1 million metric tons. Now the country, instead of getting 750 million, they get 1.5 billion. 1.5 billion. Creating how many jobs? 14,000 jobs. Is it not just an amazing opportunity that the Canadian companies can use not only to earn money, but do well by doing good? They will be earning money. They will be exporting as Canadian know-how. They will be doing economic diplomacy. They will be helping the world to reach the sustainable development. What a double win. What a double win. Now, reason why we really believe that Canadian companies should take this opportunity to come into Africa, not only, yes, it's good to do to avail aid, but it's time to talk about economic diplomacy. It's time to look at all those sectors that Africa imports and just support the continent, support the countries in order to produce it locally. And Garrett, I just thought that these are very tangible, concrete examples that Canadian companies could use to basically come and do the business. You know, the last 50 years have shown that it's not by aid the continent is going to be developed. Let's do business and let's do economic diplomacy. Thank you, David, Deepak, and thank you, Garrett.
That's fantastic, Dr. Mabuba, and I think it's very important for us also to point out that usually at these seminars, the 2 or 3 sectors that get talked about all the time are roads, railways, and harbors and ports. But it's important to understand that infrastructure and value systems are clusters of excellence, as we call them here in Canada. That the local economic development system here is also geared towards clusters of excellence through the Ministry of Innovation, and I think it's called Ministry of Industry and Innovation. And that concept that you can find any sector where if you build out the infrastructure and the value chain, you can make a huge impact. It's not just about 2 or 3 critical two sectors or one sector. Sometimes there are sectors beyond roads and railways and harbors that are also infrastructure, that are also about growing jobs and local capability and capacity, and growing countries exporting and value addition power is just as important to economic development as how many kilometers of roads were carpeted or how many kilometers of gauge railway was built out. And I think that's something we rarely hear, and so that's fantastic that you had a chance to tell us about that. Gareth, why don't I let you pick a couple of questions and then we can try and sort of answer them amongst ourselves as a group. If it's okay with Dr. Mabuba and with Janice, if you put out a question, I'll try and figure out, knowing the institutions well, I'll try and figure out who's probably best placed to answer them. But otherwise, why don't you curate the questions for us? Because I can't see them on the feed here.
Thank you very much, Deepak, and thank you to each of you as speakers. The comments, if I may just go through some of the comments, even ahead of the questions. We speak about Canada having a red carpet in Africa, and Dr. Mabuba, you've shown that very clearly, referring to the country as a prime in the lead to deliver on some of these opportunities. And Deepak, obviously your experience as well. Some interest in your how you relate your Bay Street experience as well through to your experience in Africa, how you bridge the two, sort of the language of investment. And Janice, a lot of interest as well coming through in your new venture. So if I may, Deepak, I have some questions that are targeted specifically, where I've got questions in the next round that aren't targeted for anyone. I'll allow you to allocate accordingly. Deepak, first question is to you. Your bio refers to your Bay Street experience, and we know that Canadian investors have gone into a host of markets. Would you say it's accurate that Africa is perhaps the last market into which Canadian institutional investors have yet to, really dig deep? And where do you think Canadian institutional investors are in that journey, compared to, let's say, where they were on India 10 years ago versus obviously a significant presence? The second question to you, Janice, there's some interest in how someone with such significant background like yours on the hard infrastructure and finance saw a gap in the market to really bring all of that expertise to set up a company addressing the gender lens, the environmental lens, so that, you have those good intentions, but also that sound economic footing. So an invitation to you just to share a bit more about your current work. And finally, on PPPs, Dr. Mabuba, you made reference to that. If you could share any examples, that would be fantastic. And just to everyone requesting the presentation of Dr. Mabuba, it will be made available for anyone who happens to be watching this recording. Scroll down, you'll see contact details to get in touch and to also reach out if you're not participating in this conversation live. Deepak, back to you.
Certainly. So let's go in the order that you just laid the questions out. What I found when I was on Bay Street was that I did have a chance to deal with mining and oil and gas companies, certainly 10, 12 years ago, 8, 10 years ago, sorry. I'm younger than I think, which was that platforms in Canada that are familiar to Canadian investors, particularly large institutional investors, that they are comfortable with the way they report things, the way they've managed, the way they develop their projects, execute on their operations. Canadian investors are still a lot more comfortable investing in firms that have a solid Canadian platform, but happen to use Africa for on an operational basis. So the easiest example, of course, is globally renowned miners such as Barrick and all, or Kinross, IM Gold, who have operations in Africa. There's an institute, of course, we've gone through a number of iterations in the Canadian context of improving the disclosure and reporting requirements for everybody up and down the value chain, all the way to junior miners. And so a Canadian institutional investor would rather invest in a highly risky Canadian junior miner than come out and invest through the Nairobi or Lagos or Gaborone Stock Exchange in a very well-established mining equipment provider. Even though the equipment provider is earning money in dollars, has a very stable business, has been running for 30 years and has good cash flows and a track record. But we don't know the exchange, we don't know how they manage things. I don't actually know how the hell I'm going to fly to Gaborone, this is all too difficult. I'd rather invest at the riskier end of the spectrum. And so we always had this amusing thought that an emerging market should be one where you're facing a certain degree of volatility in a high return. So if you're going to make 16% with a 50% deviation on your returns, that's an emerging market. Whether you're doing it through Silicon Valley or you're doing it, through the Lagos Stock Exchange. But the mentality instead was, I'd rather do the risky investment in a market that I understand than do a safe investment in a market I don't. And so the perception game becomes tricky. Now, you can spend years, trying to get everybody around this, or you can find the right platforms. And to us, we at ATI, the work I did previously at the African Development Bank, the work Dr. Mabuba does in West Africa, the work Janice does in Eastern Africa, Eastern and Southern Africa, to us, this is why folks like us would rather say, we are a platform you can understand. We have dealt with your markets. We have dealt with your corporate investors, your private investors, your governments. Speak with us, work with us, invest through us. Increase our capital base, increase our lending base, our liquidity base, and then that money will do good as well as earning you a perfectly adequate return for the risk that you're taking. if that's what you're more comfortable with. And that's where we come through bodies like the Chamber to talk to folks about us. And that's a very pertinent example, because 10 or 12 years ago, when some of the biggest conglomerates in India were shopping in Canada for assets, for investors and all, I was with a Canadian institution that did try to do roadshows and walk them through different markets in Canada, Edmonton, Vancouver, Calgary, Montreal. We didn't get very far because of the same reason. But as those platforms came to be known better, we now have institutions like CPPIB, Teachers, the CDQ, all of whom have billion-dollar-plus investment bases in India through well-known platforms. Mm-hmm. And so that's where the importance of institutions comes in, rather than chasing the latest fad for product or sector or country. No, go through the right platform and the right institution, and you'll be targeted at the right market. Because that's just the way the invisible hand works. I think, Janice, you had a question next, and then Dr. Mabuba.
Yes, thank you, Deepak, and thank you, Gareth, for the question about sustainable links and how I made the switch from Pidge, which indeed had a very strong focus on primarily core infrastructure, so roads, transport, water, as Dr. Mabuba mentioned at the beginning, to sustainable links, which is more about middle market companies and helping middle market companies with their net zero targets by helping them do climate assessments, integrating gender at the very beginning as part of origination. So what does this actually mean in reality? And I love Dr. Mabuba's presentation, so I'm going to borrow the example he gave of the cashew nut factory that's going to be financed, that'll get Canadian machinery financed by UK, by Canadian ECAs. So that's fantastic. But as we all know, the climate crisis is real. So the cashew nuts that are growing, wherever they're growing, are obviously going to be subject to the climate change effects that we're seeing across the board. And there's a real growing need to have a conversation about climate adaptation as well as mitigation. And to be fair, in my previous role, climate was at the top of the agenda. Pidge has a climate change strategy, does TCFD disclosures, has emission reduction targets. So even though we're doing hardcore infrastructure, that was all very important. But there's almost a part of the missing middle. These companies that are smaller, but actually need to be part of that transition in climate. So back to the cashew nut story, if you think about the fact that maybe you're seeing reduced rainfall, for example, the easiest thing to do is to support the farmers with irrigation equipment. But making that kind of capital investment today, even though it's not yet pressing, is always challenging. Yet by putting in the irrigation today, you're able to maintain and sustain productive jobs, as Mabuba said, and create a whole ecosystem around you. And let's face it, women are an integral part of SMEs. They they have a big influence in household decisions and buying, and it's incredibly silly to leave them out of anything. So, which is why, with my 3 other founders, who happen to also all be female, our focus is really about climate and gender, but for the missing middle in Africa and Asia. And I think the last point to make about what we're trying to do is, how do you get a company to do the right thing, both in terms of mitigation and adaptation, is to provide them with sustainability linked loans. So the idea behind our fund is that we'll reward companies for doing the right things, for being the good corporate citizens, but also for ensuring a better future, which means that they can maintain more productive jobs. Because as I pointed out at the beginning, there's tons of youth, the 2.5 billion population increase that we're expecting. We need to create productive jobs for the youth as well. So I'll stop there.
Thank you, Janice. Dr. Mabuba, the last question had been directed at you.
Yes. Okay. It was related to PPP, right? And many thanks, Deepak. Gareth, let me just give you a very simple example. Let's assume that you are now a president of a country in West Africa, and Deepak comes to tell you what Canadian companies can do for you. You say, these are my problems. Today, like it or not, 99.99% of African presidents' problem is youth employment. You have a relatively high educated number of people, bachelor, master degree, without jobs. All the unrest that you see around the region, the major causes is youth unemployment. And we take the cashew sector. Now you are the president of Canada. You say, okay, guys, I will be bringing you Canadian companies who can do the job. I will be bringing you my export credit agency financing arm. Use your local development banks to bring the 15% that will unlock the 85% of ECA financing. We will set in one go 14 factories that process 30,000 metric tons of cashew. We will set the factories around the country such that you have relatively well balanced job creation into the country. Gareth, if you would be the president of that African country, what would you say?
Excellent and very, very practical. And on that note, Dr. Mabuba, I really, for all of the delegates here who have not been in touch for any reason with the trade commissioner in their local market, I'm putting my email in the chat. I know there's some companies new to the continent. Please get in touch because, as Dr. Mabuba is pointing out, it's not abstract. These are very real, tangible opportunities. And I think that's exactly it.
And now, wearing your president hat, the president of Canada or prime minister's hat, you will tell them, by the way, I know that you may be struggling with the 15%. Now let me give you aid or donation, whatever you call it, to contribute part of that, let's say 15%, to do blend financing, whatever you call it, to unlock the 15%. But at the same time, you are unlocking 85% of $750 million worth of export opportunities to Canadian companies. And by that, you are doing PPP, you are contributing the sustainable development goal, you are doing well by doing good, and Canada would be loved forever.
And I think, Dr. Mabuba, it's important to note there that the complexity of those large financings and all may seem very complicated, but we do it every day. It's our job.
Every single day.
People like yourself, people like myself, people like Janice, this is what we do every day on the continent. So, you know, it's that importance that when you want to do something on a large scale, partnering with the right institutions that have local knowledge is very important.
Absolutely.
Because if you get off the plane and start wandering around by yourself, you're going to spend a lot of time, right? And this is where the platforms become important. Not gatekeepers, because that has a bad connotation, but the pathfinders, as Janice called them. They've already been there and done that. Don't go back and be yet another pathfinder when somebody's already done this before and already has. So if somebody has already gone and built cocoa processing plants, talk to that same institution because they can then do cashew nut processing plants as well. But if you want to now start a whole new organization to do cashews, you're going to spend 10 years just setting it up. And I think that's the critical message from what you said about going big, do big. Right?
Yes.
Go big.
And you are so right. You are so right. And sometimes you even don't need to build the cashew factory. 99% of the components can come from Canada. I have seen it. I have visited it. I have financed it. You guys are extremely good in power. There are gensets. There are, solar power panels. You name it. Turbines. Look, don't try to build the whole factory. Deliver the components. And there is maybe one guy sitting in India or sitting in Vietnam or sitting in Italy who can put them together.
Right. Janice, you were just making an observation there to add to Dr. Mabuba's.
Yeah, no, actually, yes. The comment about electricity. Just to remind everyone what I said earlier about people who have access to electricity. Just under 600 million people do not have access to electricity. And then when you think about the rural areas, probably where you want to put your farms, the electricity access in rural areas is incredibly poor. And I think that's another opportunity for Canadian firms, particularly in clean renewable energy, which is a huge growth area and one that can be financed without worrying too much about PPPs. So there's that distributed energy angle that I think is a huge opportunity for Canadian companies as well.
I think it's called off-grid in the jargon. Gareth, did we still have a few minutes for some more questions? How are we doing?
Indeed, very, very well. Thanks for all the questions coming through. Dr. Mabuba, I think you're going to have a lot of people knocking on your door, and that certainly goes for you, Janice and Deepak as well. A comment that I received is that, you know, a lot of these African institutions, Canada has played a role in many of them. Sometimes you'll find Canadians even there, and that could be a whole session on its own. But this is not a new partnership. What we're reflecting on and discussing are opportunities in a partnership or a corridor, Dr. Mabuba, as you described it, between West Africa and Canada, that already exists. Again, trade commissioners, welcome to all those who are on the call, and thanks for your hard work, are playing that role for individual companies every single day. And if you're not a client of the Trade Commissioner Service, you know, let us know and we'll make that connection for you and provide those details. 3 questions. The first, and Deepak, I'll allow you to allocate the questions. The first relates to Janice's point on the 600 million folks with the need for electricity. Many people often think about an investable project as a large project. I know that's a pension fund perception, or reality indeed. But what about smaller projects? How should we be seeing these as opportunities that are component parts, if you like, as Dr. Mabuba said, but smaller parts in solving this bigger electricity opportunity? The second question goes to the issue of projects not coming online. You know, they stay, let's say, in the feasibility stage or just beyond. There's often a risk perception that was pointed out by the panelists, as one individual notes. But is there anything else in terms of perhaps a need for expertise, a need for delivery partners that's actually holding those projects back, and where there can Canada play a role? And the final question, and actually I'm going to go to the chat for this one, Liz Thomas, I see you posted a question a few minutes ago. It's to all the panelists. Africa's got a lot of opportunity and potential, as has been illustrated today by Dr. Mabuba and others, yet we see the potential is not realized at the scale with which we'd like to see. Liz asks, what do you think are the most important factors that are hindering realizing the vast opportunities, and how do we close these gaps? Deepak, I'll allow you to curate those questions as you see fit.
So I'll go in reverse order. I think Liz's questions around why it is that scale hasn't been achieved on projects and all, I think would probably be best addressed by Janice, if that's okay. Sorry, the middle question, if I remind me.
Yeah, that question goes to the 600 million gap with electricity. A lot of people are saying, well, right, we need a project that is for the size of a pension fund.
I'll address that because of some work I did on the off-grid sector. And the third question, I think, will go to Dr. Mabuba, if that's okay. But I'll ask you to repeat it closer to the time. Janice, do you want to address the first question there? Around why it is the projects haven't scaled up quite so obviously, given that we've been talking about the infrastructure opportunity in Africa for some years, almost a decade, 15 years now. Why haven't projects scaled up? Because I know that in your previous role, you saw a lot of successful education of one-off things. How was it that these did not replicate quickly across the region? And then I'll go to the question about the off-grid distributed electricity opportunity.
Yeah, sure. Thank you. And I think it's an interesting question, because we can talk about scale, and I can highlight a couple of real life PPPs that are in the public domain. So one is the Nairobi Nakuru Mau Summit PPP. It's a $1.8 billion project in Kenya, and it's past the feasibility stage. It is past contracting stage, so they've awarded it to a particular bidder, and banks and the developer is working very hard to get to financial close. But these projects are big. And remember what I said about pathfinding? You know, it takes a while, so it's taking a lot longer than is expected. Another big project I can mention is again in the public domain, the Kampala Ginger Expressway in Uganda. It's another $1 billion project. One that again I think has just released the final RFP and is in the process of selecting the final bidder in the next couple of months. So there are big projects that have come to market, but I take on board your point, Deepak, which is a very fair one, which is how come, you know, we're not seeing an acceleration of these projects, and that was part of really the McKinsey project article about the Africa paradox of projects. And so let's take an example. We did a fantastic transaction when I was at Pidge with a company called Acon. It was the first green bond in East Africa. It was to finance student accommodation. It was a project bond that we listed in the Nairobi capital market and the London Stock Exchange. So a fantastic story. But to be fair, there hasn't been another Acorn. And I guess if I was to sort of explain why, I can talk about the pandemic hitting right after Acorn. But I think it's also down to the fact that people need to spend time paying school fees, as the Acorn CEO always says to me. You need to put in the hard work to prepare your business and your project for that kind of financing, and that takes time. Now, things are changing rapidly. I think last year, there was an uptick in some PPP projects because governments recognize that they don't have the balance sheet, particularly with COVID, to finance these projects anymore. So private participation will become and remain key. But it's, yeah, one step at a time.
Okay. I'll address the question around how how investors can participate in smaller scale financing rather than just large scale. And the simplest way to do this, frankly, is through the provision of your capital. When everybody wants to board a plane and go to Africa and set up their own one-person NGO, it becomes incredibly difficult for them, and the vast amount of their capital that they have to contribute to the continent will get dissipated in setting up. If it's a small business, same sort of story. That's exactly where folks, like good platforms and all come in, because investing in the bond issue or the equity issue of a regional African development finance institution or an local African bank has far more positive knock-on effects than if you want to do it one-off, one time. Find institutions that are working in areas that really matter to you and that have a good track record of lending to sustainable businesses or to diversity-led businesses or to gender-focused businesses, and then try to make sure that that's where you put your money. That often has a much more positive catalytic effect than trying to be constantly foraging for one deal at a time, one project at a time, that kind of thing. And of course, then there's always the opportunity for you to go to institutions and say, I will buy a certain number of your products. So for example, there are funds and all that are targeting the distribution of off-grid solar powered consumer goods and all. A lot of those institutions, a lot of those firms, have mechanisms where you can actually buy a number of items and say, distribute these for us, right? That's pure grant giving in its purest form, but it makes a huge difference. And that actually has a much better effect than trying to go and create your own one-off, one-time, entire platform on your own, because the vast majority of the capital you have will be dissipated in just trying to get that done. Sometimes it's good to rely on others to do the giving for you. Gareth, there was a third question, but there was a nuance to it, and I'd like Dr. Mabuba to answer it, but if you could just repeat it, because I don't want to mess it up by saying it wrongly.
Yeah, the question relates to the 2.5 trillion pipeline of opportunity referred to in the McKinsey report. A lot of that doesn't come online, and one of the reasons is risk perception. But a question is, are there other reasons such as lack of available expertise or possible partners, other factors where there's actually a gap for Canadian companies to come in and help realize these projects and get them on stream? So this is a gap that is beyond just the financing.
Right. And Dr. Mabuba had talked in his presentation about Canadian expertise and all coming to the table as much as Canadian goods, and that's why I thought he might be best placed to answer it. Doctor?
Okay, many thanks, Deepak. And Gareth, if you see today, most of the African countries, when a president comes to power, they have what I call the National Strategy Plan. In some countries, they call it PND, National Development Plan. But in summary, that's the strategy of what the president wants to do the next coming 4 to 5 years. I think that should be the starting block of when it comes to those big mega infrastructure, where I think that the Canadian companies should start looking. Number one. Number two, independently what they are dreaming, leverage of the local trade attaché of the Canadian embassy to see on the ground what are the priority sector, what should be the priority sector, and not what sometimes what I call the dream sectors. And you will see that in common, power, road infrastructure, railway, and you guys are extremely good at railway, healthcare, agro and agro processing, telcos / fiber infrastructure / fiber optic. Those are 5 to 7 countries, 7 industry sector that are common to almost all the African countries. And from there now, start the real question. Do you guys want to wait till everything is ready, feasibility studies is done, they hand you a report ready to execute? Forget it. I think that what Canada should do, spotting those opportunities, putting seed capital, leveraging engineering firms in Canada to do a higher level feasibility studies for those industrial sectors in order to promote Canadian export. And a good example was the Mali-Senegal railway. Canadian companies are currently in advanced discussion with the Senegalese government. But if they rely on Senegalese money or Senegalese West African development banks, etc., to do the financing of the feasibility study, it can take time. If you guys do the feasibility study, you guys, if I'm not mistaken, you are a good shareholder in the African Development Bank, you get hurt. And today, in every African country, they are open to what I call EPC plus finance, where you package the financing with the support of the EPC, Canadian EPC, it will work. Many people are thinking about, yeah, it's tough, these are white elephant. Guys, if you design the opportunities is known. If you do the feasibility study, package the financing, working with people like Deepak, myself, and Dennis, we are on the ground. We work abroad. We know what good looks like. We know how things should be done. The likelihood of you getting it wrong is very, very low. Now, sorry to say it too openly, if you want to do now the big bang, politician, blah, 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 nothing's going to work. You're going to waste your time. And I strongly do believe that you guys can build a metro. You guys can build railways. You guys can build a power plant. You are one of the best mining nations. You can build road. You can build bridges. You can build a gas power plant. Be our guest.
But I think, Dr. Mabuba, that was one of the areas that, as Gareth was mentioning, the Trade Commissioner Service plays such an important role.
Absolutely.
In opening for Canadian exporters and traders, the local opportunities. We have a very good team that I worked with in Nairobi. You may remember they visited me once or twice at our old office.
Absolutely.
Yeah. Gareth, I thought perhaps we might take one last set of questions.
For sure.
Because I get the impression there's quite a few out there. So maybe one last round.
Yeah, Dr. Mabuba, just on the point they raised around the opportunities for feasibility, the number of companies in Canada that can do feasibility and do it well are endless. Just a few months ago, I was on a flight to Gabon with one of our companies, and incredible, the point around the national development plan or whatever the relevant strategy is critically important. Spend the time on that flight reading and rereading, because it isn't just a doorstopper or a vague document. They're really important. And anyone who wants to document for any applicable country to see those opportunities, please get in touch with us. But be prepared. The project won't be ready-made, but it's incredible once it gets going. And there's one in Libreville, just north right now, as a result of that trip a few months ago, that's making huge progress. So it's wonderful to see people living it out when taking that advice, Dr. Mabuba, and really making sure that you just get into the depths of things. Deepak, I have got a few questions that maybe I'll take those that are specific to individuals. And so if you like, I'll do a round now going to yourself. You are currently based in Ottawa, presumably, well, and it's not presumably to that asking the question mark. Deepak's very involved and knowledgeable with global affairs. Deepak, can you speak a bit to Canada's relationship with institutions at a high level? Because Canada has been very involved, as Dr. Mabuba points out, shareholder in the African Development Bank. So kind of that high level relationship Canada has, which perhaps, is not always appreciated. The second point or question goes to you, Janice, and it's around the issue of the respect for investors. You know, it's an issue globally where people speak about investor protection. What are some of the important facts that are really moving this along? You mentioned current work that you're doing on the continent. I know you're in Mombasa right now at meetings related to this issue of investor protection. But what are some of the positive trends that you think are really worth noting that are making a big difference? And then final question to you, Dr. Mabuba. Because you're so practical, it was, if you were going to start a business right now, if you were a Canadian entrepreneur, what business would that be? And not just the sector, but specifically what component, as you referred to, would you take up? That's just a question if you were to start your own venture. Deepak, first question though, over to you.
Sure. So Gareth, we've had some fantastic support from the Canadian government in two very specific areas. I'll come to a third one, in fact, which is more it's quasi-political rather than purely financial. So of course, there is certainly the shareholding within the African Development Bank. We have, in fact, the executive director who represents Canada also looks after the interests of 2 or 3 other shareholders as part of a constituency arrangement, as we call it in the multilateral world. I confess that I'm not aware that Canada has invested across other major African platforms. So you have Africa 50, Afri-Exim Bank, the Africa Finance Corporation, ourselves at Africa Trade Insurance Agency. These are pan-regional organizations that have a huge impact day to day on the business structures of the continent. But I'm afraid we haven't really been very lucky getting a hearing in terms of contribution to our capital base. And it won't surprise you that with my background, I truly believe that contributing to our capital base would actually have a huge catalytic effect for the Canadian government and for Canada Inc., as opposed to sort of, you know, chasing hairs here and there, trying to find one clever idea at a time. It's better to go with platforms that operate on a day-to-day basis. Sub-regional organizations such as EBIT, Trade and Development Bank and all, from what I know, even less direct capital or liquidity contribution. And I think that there's been, I won't use the term failure, but there's certainly been a lack of communication around this. And perhaps we haven't engaged with institutions very well from our side. But I can assure you, I'm not the only Canadian who's working in African financial markets at a senior level. There's many of us. But it's really quite remarkable that most of us have better contacts in Europe and in Asia than we do when we come back here or come back home to Canada. And so I think that definitely needs to improve. There's no question about that. Unfortunately, as I said, certainly dealing with the private institutional investment sector in Canada, the experiences I've had have often been along the lines that capital requirements in the region at a macro level are very huge. They run into trillions. But the capital required to catalyze those trillions is often tens and 20, tens of millions, perhaps 100 million here and there. And those amounts are almost too small. So there's that paradox in itself that for large institutional investors, African transaction spaces haven't gotten individually to be big enough of interest, but African platforms themselves are raising capital that isn't quite in the amounts that is needed. But when you come to somebody like an ATI or an African Development Bank or an Afri-Exim and contribute to our capital, it does have a multiplier effect far greater than if you spent that same quantum of money wandering around trying to do your own thing. And that's the story that I think we need to get better at selling, and where organizations like Global Affairs and all could play a huge role. And certainly the Chamber does a fantastic job of giving us profile and platform. But I think we need to coordinate better with institutions here in Ottawa to get our message across. Janice, I'll hand over to you and then back to Dr. Mabuba.
Yeah, sure. And I'll just start very quickly by mentioning that the fact that Global Affairs Canada is one of the funders to Garantco, the previous institution that I worked at. But to answer the question about examples of actually this investor attraction, I think first, I'll say 3 things. First, there's 3 NIFCs in Africa that have just launched. So there's Casablanca, there's Kigali, and now there'll soon be Nairobi as well. So that should send a message. Secondly, I talked about the PPP pipeline. But we're seeing a lot of traction in PPP units in Tanzania, in Kenya, and even in a small country like Malawi that has a $7 billion GDP, but put out to market an RFP for the Patamanga Hydro, which is a 700 hydropower project. So, PPPs are being taken seriously and are being seen as part of that post-COVID recovery plan. The third thing I'll say, and probably the most relevant, like one of the biggest challenges we have in Africa, as we know, is sort of unfortunately, the corruption angle, and governments are taking that quite seriously. So I have, this morning I spent about 30 minutes being taken through as a judicial officer how we do e-filing. So everything's moved electronic for the Kenyan judiciary. So you have a case mentioned, you can Google, it's public information. And we're seeing that not just at the judiciary, but in the business registration services, which is basically our company registrar. And that's helping speed up the factors around ease of doing business, which of course is one of the ways to make it easier for investors to come to Africa.
Thank you so much, Janice. And Dr. Mabuba, I know you've answered the question specifically in the chat, the whole value chain of poultry, food, power, and health by order of priority. So thanks very much. If I may, Deepak, I'm then going to use the floor to ask another question that's directed at Dr. Mabuba. And that is the recent announcement. It relates to the recent Africa policy commitment by Prime Minister Trudeau, developing a very clear strategy on Africa, relevant for the time and period we are now in 2022. What, in light of the kind of business aspects and general economic opportunities that you've outlined, what do you think should be at the forefront of Canadian policy from a government perspective in order to enable or help enable the realization of these very practical business opportunities? That question is any aspect of either strategy or policy.
Look, it's a very tough question, right? It's a very difficult question, but I would link and I will correlate very, very high how much aid a country receive vis-a-vis addressing the real problem of the countries. And for me, if you feed your people, you give them power, education and health, you have done the right thing. When I see, let's say, countries saying that we are importing, let's say, hundreds of millions of dollars of maize, and they are using, sorry to say, Chinese money to build the 300 million stadium, it doesn't sound right. And at a policy level, you can address it. I can tell, I'm happy to give you my aid, but these are the type of things that I don't think that you should be doing. I'm not saying don't do, because I don't want to patronize you. But if Canada use the aid that they are giving to people in a smart way, they can drive the policy in the right way. And I strongly believe that feeding the people, good health care, good education system, power, because without power, there is no economic development. Factories cannot work, companies cannot process, etc., etc. Reason why I strongly believe that by trying to influence the policy in the right way, and for me, right way meaning right sector, right budget spending, public spending. And also, and sorry to say it, Gareth, too openly, it's not a shame to tell people that we are here to do business. Le général de Gaulle disait, un pays n'a pas d'amis, un pays n'a que des intérêts. African countries don't need to be patronized. Let come Canada and West Africa do real business. And when we do business and it's win-win, trust me, we will become a strategic economic partner. And by becoming a strategic economic partner, it will be in your interest to help us. Thank you.
And Dr. Mabuba, in fact, historically, Canada has that relationship with a number of countries in Latin America and the Caribbean, Gareth. We're here in Canada, we are familiar with that, right?
Excellent.
We have those relationships and they're built on business.
Exactly.
Business, of course, then people immigrate, we have communities from those countries here, all those things, but we have all that from Africa as well.
Exactly.
And so, this is not beyond the wit of man. And we have a number of MPs, Dr. Mabuba, for example, who come from diaspora African communities in places like Edmonton and Toronto and all. They're MPs at a federal level, at a local level. So one of our mayors in British Columbia, of all the places, a small town, is a Kenyan, right? He's a Kenyan expat, for example. So Gareth, I suspect if you went on, I think you could keep finding a question for every one of us for the rest of the day. But perhaps we could do what we've done with other panels, which is that you distribute the questions to each of us, and then it's up to us to answer individually in email. I know after previous panels, I've always had that people's questions come to me and then I sort of reply to them individually and that kind of thing. So I'd certainly ask you to do that for us as a panel. But I'm conscious that we're coming up to that sort of 11:15, 11:20 limit that we had. And I wondered if you'd like to give everybody a chance to do a bit of a closing statement. Certainly both my brother, Dr. Mabuba, and my sister Janice to do a small closing statement, and then I'll give it back to you to wind up.
Perfect, Deepak. I think that's a great way.
Thank you very much. Let's do this one in reverse order. So Dr. Mabuba, perhaps a small closing statement, and then Janice, if you will.
Okay. Many thanks, Deepak, and many thanks, Gareth, and many thanks to the Canada Africa Chamber of Commerce. I think that these are amazing opportunities and amazing platforms that that really show that we can do. And Gareth, me, I really I wanted to take this opportunity to tell you also that we are very open to come to Canada to talk to your companies, to do roadshow with you, explaining to you what the opportunities in Africa. And I wanted to take this opportunity to thank the Délégué Général of Quebec, because they just visited a business that we are currently setting in Senegal. They spend one full day visiting the whole activities that we are developing there. And these are early days, but you creating an international conference or workshop where we come sector by sector, taking your company through the opportunities, and also telling them how. Because sometimes you guys, what you call small ticket could be a large ticket for us. For example, when you say $50 million is small, it is, let's say, a relatively medium-sized ticket for us. But like Deepak said, we have done $4.6 billion worth of transactions. We have also done $10 million, right? But the nice thing about maybe Gareth, you thinking about creating an Africa roadshow where we go town by town and tell people these are the sector, these are the opportunities, this is how you're gonna get about it, and this is how potentially we can finance it. And this is now where you use your influential power through the African Development Bank, and I use my influential power through ECOWAS Investment Development Bank. I take you through the corridors of ECOWAS Commission, etc., etc. Take you through the Ministry of Finance. And sometimes when people like yourself, myself, Deepak, are taking companies on the ground, they get more chances to be heard. Thank you.
Thank you. Janice?
Yes, Gareth. I'll be a lot shorter, briefer. So just first, obviously, thank you so much for the opportunity to speak to everybody. Happy to take questions on email later on as well. I think that we've said a lot today, but I hope the one thing that everyone goes home with is the fact that there's tons of potential in Africa. Yes, there's challenges, but there's tons of potential in Africa. And that's the opportunity for everybody. And that opportunity comes in different shapes and sizes. One question you'd asked, Deepak, was about sort of the smaller tickets. I think he answered well, talking about aggregation vehicles. I think those aggregation vehicles are important, not just the very big DFI ones, but look out for the newer, smaller funds like Sustainable Links, who could be looking at some of the very exciting opportunities in climate finance. That is, for me personally, I think a huge priority for Africa and for Africans. So thank you once again.
Thank you. For my part, Gareth, I think it's been fantastic to have this chance to have both my former colleagues speak so knowledgeably and so comprehensively about the opportunities and to give you the true perspective of how challenges aren't really challenges. We overcome them on a daily basis. They overcome them all the time. They've done it for decades. They know exactly what they're doing. People like these are folks that we should be doing business with out of Canada. And I'll hand back over to you to close things off. And I'm sure we all look forward to having any questions that we can answer specifically sent over to us. I have no doubt we'd all be delighted to do so. And with that, I'll hand back to you. Thank you so much.
Thank you very much, Deepak. Thank you to each of you panelists joining us today. The feedback has been phenomenal, and this has been really, I think, an inspirational as well as an insightful conversation with some very practical examples of next steps. Thank you to everyone for the comments that you're sending through on WhatsApp as well as on the chat. I've appreciate some of the words of thanks that have been directed to myself and the Chamber, and it would be totally amiss if I didn't redirect that to Global Affairs Canada, our partner in this event. It's not just one event, but a series of events. The ability to come together, to speak frankly, to discuss the opportunities, to discuss the challenges, and always to come about and say, what is the solution, I think is very special indeed, and certainly a competitive edge that Canada has, that free flow of information and very frank discussion with leadership across the public and private sector. So thank you to Global Affairs Canada. Deepak, I'm going to be calling you to set up a meeting as early as this afternoon. Some of your ideas and suggestions received by GAC or from GAC, very keen to speak with you. So please be on hand for that if possible. But really, thank you to each one of you. Have a wonderful evening. Janice over in Mombasa, Dr. Babuba, thank you again for joining us. I'm hoping to visit Abidjan soon again. And Deepak, Dave, for your work at the Chamber, that it continues. Thank you very much for what you've done over the past decade and what you still are doing, especially creating some of our programs. Chris McLean, Stoneshare Capital, latest director at the Canada Africa Chamber of Business, just commenting that this was a great session. Chris, if anyone hasn't heard Chris McLean speak, please go on our website, Google Chris McLean, because some of the very practical examples of what it is to invest in projects is certainly all highlighted there, with the wonderful work being done out of Calgary across Africa. Thank you so much to each. I hope you have a wonderful rest of your day. And if you're watching the recording, please just go further below to ask any questions. We'll be in touch with you. Have a wonderful time. See you next week, and goodbye.
Bye. Bye.